Hello traders, good morning, good evening, and happy Tuesday. How are you today? Please give me some okay that you can hear me and that you can see me. Alright, wonderful, thank you very much. So how was your weekend, guys? We didn't have the chance to meet since then. Well, that's true, World Cup is over. We are back to reality, right? It was a good 1 month break out of everything. World Cup, Wimbledon, welcome back Novak Djokovic. So it was really good sports period. Now it's time to relax. Summertime. Okay, so what do we have? Quite beginning of the week yesterday. Today we see the emotional moves of the market are back to the market. And I say emotional because basically when you break it to pieces, the big picture does not change. And little moves could cause some confusions on the short term. And the ones that are important to pay attention to, basically that's the commodities pairs. They are the main focus currently, mainly due to the fundamental events we currently have, especially all the US, Russia, US, China, US, Eurozone, and basically US against the whole world. That affects, of course, first of all, the commodities themselves and the commodities pair due to the trade relations between the countries. And same is happening currently. Also, the yen pairs worth the attention. So let's begin. Let's start with the gold. The long-term plan still was and remains bullish. However, we do need to pay attention what's happening with this trend line, because if it managed to break that and stay below, that could be a warning sign for a possible triple double continuation. This scenario is more than possible, and we do need to remember that, because we might see the gold going again for the long run towards the zone of 1000, maybe even lower, before the next long-term buys. However, as long as the pair holds, we treat that as a continuation sign, mainly due to double wave correction with expectations for the rally, and that's the idea. Now, on the shorter view, there is no divergence on the weekly cycle currently. There is only the trend line and only the fact that this is a corrective cycle building up on the weekly and the daily combination. So that might turn to be the false break here and the rallies. And this is the plan to watch for the bullish scenario. In order for the bullish scenario to trigger and become valid, what must happen with the gold is daily must be a cycle by itself. If we stop for a second and ask ourselves the question, okay, so is daily a cycle? The answer is we have the 161.8 area of this expansion, while the second leg is a special cycle by itself, right? So we build up on that other cycles, and we figure out that this area, the 1220 down to 1200, becomes the critical zone for the possible buys to begin from. So we do have the levels, we do have the cycles. Now the biggest question, how do we accept the reversal? In order for any instrument to build up a reversal, there has to be one of the two scenarios. First scenario, false breaks and convergence. Since we are trading here on a daily cycle, the next cycle that has to fit in, the next time frame that has to fit in is the 4-hour chart. Do we have any false break with convergence on the current conditions? The answer is no. The last time where we got the convergence was here. We got this false break right here. Then we got the convergence and we were buying on a short term, right? That was the plan. Since this one paid and became two waves with bearish divergence, the evidence for possible bearish continuation came in play. And the final call was the break below 1240 previous week. Since this moment, we never get any new false breaks and higher highs. Therefore, the pressure on the gold for the short term is yet bearish. And it doesn't matter how much we wish to buy, the pressure currently is bearish. There is no evidence for any bullish appearance. So yes, attacking this level does totally make sense, but the zone is pretty big. It's anywhere in between 1220 down to 1200, right? When exactly the stoppage will happen, and will that happen, we cannot know. So what we do want to see for the buys is the false break to happen, higher highs to form once again, and then we can start looking to buy retraces. Meanwhile, the pressure is still bearish. Same said about the silver, who does build the idea of a false break, never get any higher highs since. So on the short term, still pushing lower. For us, everything of that is acceptable. We are still traded inside this long-term range from the weekly, right? So any kind of play inside to the downside are still okay. Any kind of moves to the downside are still acceptable. Once we form the combination from the weekly and the daily cycle, and that should be here, that's the next levels, one range move. That's the next possible range to pay attention to. So this is the first critical one. The next one is slightly below 1500. And the most critical one is on the bottom of the weekly range, which is here, 161.80. So in order to be bullish with acceptable setup, we need false breaks and convergence. Currently, it's not there. If it's not there, on the short term, the pressure remains bearish. We will switch to bullish once the false break happens and the convergence forms. This is the first setup. Second is triple move up, double wave down, and the breakout. This is the second alternative for a possible turn around. That's all. That's the possibilities we would like to watch in order to be able to trade. And as long as it didn't happen, short-term bearish moves were and remain in play and acceptable. Okay, good. So that's about the gold and silver. Now oil. Oil is actually interesting because, well, I'll start with this cycle, okay, then I'll go lower. Oil, according to the weekly, has the levels to go higher, but look what it's building on the 4-hour chart. The idea of a triple cycle, which might go and even develop as a special cycle here. That is a possible reversal sign. Now, why I started from here and then go back to the weekly? Because remember the weekly cycle? After we broke the 100, the idea was that oil has the room towards 161.8, which is higher. But then another false break happened. Right? The breakout turned to be fake. The divergence completed with MACD turning its slope. And in order for that to become realistic, we need false breaks and convergence. Since we did not have any, what is acceptable here is the triple double, right? So the triple is currently forming 1, 2, 3, or as I said before, it could become the special cycle. It's the same format. Triple or special is the same. From that point, we would require 2 waves upside and a breakout. If that happens, we have a great confirmation for the bearish continuation to the longer term. On the short term, after breaking the 161.8, which is the last acceptable level of the double cycle correction, right? This was the double cycle. We got our bounce we wanted on the previous week. It was 200 points immediately flying to the upside, but then another push lower, which now makes it to be as a not a corrective cycle, as a developing cycle, possibly developing the special move here. So oil, at least for now, on the short term because it still did not have the longer term correction triple double breakout. So on the short term is sell the rallies. Okay, and rallies could happen, of course, as closer as we get to this area, psychological zone 66, 65. In order to be able to trade that, what we need to do is to measure the last second leg to find its levels and to match the daily cycle with it, the 1 hour chart cycle with it. So this is the 4 hour, this is the mini 1 hour, and this is the zone, right? Divergence must to form here, and the turnaround must happen from this area. Once again, psychological area 66, 65. Okay? So this is what we have for the oil. Now, natural gas is another commodity we have. And for this one, as long as we are above 260, we are bullish. We are waiting for false breaks, which started to form, but since then never got a higher high. So we can't bring in the position we closed for the investment, the partial cash out we closed for the investment. So we are waiting for the turnaround to form and happen. Okay, so that's for the commodities which I wanted to start with because they are moving. Now back to Forex. Euro dollar, the idea of ours was and remains, as long as we are stuck in a range, pullbacks, and we would want to buy. So that does not change. This could become a double wave. Bullish divergence could and should happen before we go for buys. The whole idea for the euro dollar is as long as this range after the special cycle holds, drops should be looking for should bring buy opportunities. So can we trade drops from the top of the range? The answer is yes, we can, if it fits in with the trading strategies you have for the intraday. The answer is yes. But we do want to go and look for the longs on the next critical levels. This is the trend line that we have. This is the zone. From there, we will be looking for the next portions for the buys. Remember, this is for the short term, because for long term, we do expect the euro dollar after that to create another push downside. Same said with the pound dollar, which is bearish for the longer term, however, still stuck inside a range currently. Okay. This turned to be a fake convergence. After a regular divergence principle, it turns to be fake convergence. This one, a fake breakout by itself. And we are stuck. So on the short term, rallies are more than acceptable. For the longer term, we would want to sell the rallies because the pound dollar still has to take us towards 128, 127. Euro pound, as long as the last stop holds, the pair is bearish. For conservative, we want to break this low, right? To start the creation of lower lows. For aggressive, we already got the trendline breakout, the last trendline breakout. So basically, it's bearish. And as long as this invalidation area holds, because break above the invalidation area might lead for slightly deeper correction to the upside right here, the zone of 089.50, 090. Okay, but for the long term, the plan was and will remain bearish, mainly due to the fact that we are trading the weekly triple and the expectations for the move now. Okay, so the best way to again to trade that is conservative, break below this low just to start the evidence of the bears, and then sell the rallies for a more aggressive inside this scenario with the idea that this is the invalidation area. Next one, dollar Canadian, finally making the second leg, which is basically exactly what we want to say. Now there is one problem with this cycle that I have. None of the legs is technically classical. The first leg is just kind of one candle, right? The second leg correction kind of stuck inside the two candles. Really nothing too clear. And look how the first move look here with this spike, which means dollar CAD is very, very, very tricky. The big money is not inside. Technically, it is still correct. Sell as long as we are below the invalidation, and the best way to trade that is get two waves on the 4-hour chart. Why? Because the last divergence available on the higher time frame is bullish hidden. If the last divergence on daily is bullish, the 4-hour chart must be a corrective cycle. Corrective cycle could be one of the two options, two waves upside or a range. Currently, it's building the second leg. This would become the area where we would want to see the sell setups form. The best way would be to make the rally and a breakout. More aggressive way would be to get this rally, and on the lower time frame, which is the 1-hour chart, make sure this is a cycle by itself, double, triple, or special. Then we can look for the breakouts on the 1-hour chart. Okay, if the 4-hour chart is a double cycle correction, then each of the 4-hour chart legs must be a cycle by itself on the 1-hour chart. If it does, we can trade the 1-hour chart breakout. If it does not, stick to the 4-hour chart. That's the whole idea. Okay, so basically, as long as we are below the invalidation, dollar CAD remains bearish for us. And the best levels to watch for that scenario to happen would be the levels of this corrective cycle. It starts with the 132, but mainly 130 to 60 approximately. Okay, dollar yen was and remains bullish since the breakout happened. We are looking for the stop evidences, and this evidence should be with the false breaks. Do we have any false break? No. Do we have any convergence followed after the false break? No. Do we have any 3 waves down, 2 waves up correction? The answer is no. Therefore, this bullish divergence is the last divergence traded. Dollar yen was still and still remains bullish. The next important level, if this one is not respected, and it seems currently at least that it's not, next critical zone is here, the 114, 115. So we might slightly move there before the bears take the control again. Plus, remember, this is also fits in the full expansion of the second leg. It's become a critical area It seems we are going and getting closer. So dollar yen for the short term remains bullish, mainly after invalidating the idea of the daily range and by failing to create a breakout below the trend line. Since it did not do that, the cycle changes back to the bigger expansion. Range cycle becomes irrelevant and the big cycle expansion goes on. Next levels are, well, the first one is here. Next one is 114, 115. We don't have any evidence for sell. Any evidence for sell. Not from the daily, not from the 4 hour. Not a false break, not a convergence, nothing. So meanwhile, the short-term idea was and remains buy pullbacks. Like this pullback, for example. So for all those who asked about this pullback, is it valid? 2 waves? The answer is yes. 4 hour chart is a bullish hidden divergence. And no divergence against us. 1 hour chart confirms this divergence to the upside. So the answer is yes. This is a very valid trade. Okay, so that's all. Next one, Euro Yen approaching to the 132, 133, which we wanted to see. We're very close to there. We need to pay attention to this area. There is one problem with such cycle, and this is the fact that the second leg is longer, creating longer than the first one. This is the first, this is the second. Second is longer. So 100% is very tricky level here, which might be a little short-term pullback before the longer-term continuation. Now the daily divergence, you see, also not in play. See that? So there is the 100% level, double wave duplication. The level is good, 132, 133, especially when the 4 hour chart fits in and build a special cycle by itself there to the 261.8 of this, right? So we have this special cycle forming. This is very likely to be a short-term retrace zone, not a long-term retrace. And at the moment we are back to the trend line with bullish divergence appearances, we expect the Euro Yen to continue upside. So 132, 133 is the zone we are looking for the short-term retraces before very likely longer-term continuation upside. Same with the pound yen. There is no cycle, no divergence completed, nothing that is preventing from the bulls to continue. And from my point of view, these short-term pullbacks are just to bring in higher rallies. Okay, that's for the pound yen. Here we go. That's the zones we should be fighting on the short term, right? And basically, this is why we got these pullbacks. They still might continue, right? But for the long run, we are heading higher, very likely. There is no divergence on the daily cycle. No bearish hidden divergence for trend continuation. Nothing, as for now. So basically, as long as this trend line holds, the pressure is bullish. Okay, short-term pullbacks definitely acceptable from the levels mentioned, but the long term doesn't look like turning around yet. Next one, Aussie Kiwi. Aussie Kiwi, for long term we are after buys. Short term, however, still holds the apparently the 61.8 with the moving average divergence to hold. So Aussie Kiwi, we still want to see 4 hour chart retraces into waves or a bullish hidden divergence before we are after buys. And that could be also, of course, a ranging scenario here before we are buys, right? Two waves or a range, and we are looking for the buys. Short term definitely can make the correction to be slightly deeper. The setup must come from daily and 4-hour chart combination in order to be able to join the weekly cycle to the upside. New Zealandian Canadian, we are after sales according to the weekly and monthly cycles. And now we do have the second leg developing here. This was the first. Now the second leg developing, the bigger second leg. Always remember, when you have a kind of a vertical move to the downside, straight move, the corrections are always uglier, trickier, and harder to trade. Okay, so this is for the Kiwi CAD, and this is the levels to watch. So we have this and here. Well, also of course higher, but currently it doesn't seem too much relevant at this stage. So what do we want to see happens? Two waves going and a breakout of the trend line. Or if the second leg would be a cycle by itself, then we can look for the trend line, for the breakouts of this leg. Okay, so the short-term rallies are acceptable. And by the way, why do they happen? Remember the scenario we said could happen on this view? So here we go. Is that tradable? From my point of view, yes, but does not worth it completely because it's against weekly and daily. From my point of view, it's much better to trade sell rallies when the weekly, daily, monthly are all bearish cycles. So the second rally is happening, and the levels to be watched before the next portion takes place. Same with the Kiwi franc, which now is developing the second leg. Okay, and we want to see it goes, make the lows, and sell the rallies. Let me check my list. Okay, Aussie dollar, New Zealand dollar, basically like the rest of the majors, like the euro dollar, pound dollar, and the rest, still bullish as long as we are above the invalidation. Same with the New Zealandian, bullish as long as we are above the invalidation. Drops to be bought, and this was the last one we got. Quick move and rally. Okay, so you can just check my updates. Okay, and all the rest of the crosses, we are still stuck in the range, guys. I know it's annoying, but remember, we can't affect the market. We have to listen to the market. Okay, it doesn't change. Same with the Euro Aussie, same with the Pound Aussie, same with the Euro CAD, same with the Pound CAD, same with all of these crosses. They are simply not the best at this time being. Accept that. It's because it's annoying. We as traders always tend to find setups, right, to force it to happen. But it looks like that, but it sounds, but I heard, but I saw, but. We always find a reason why yes to trade. Stop for a second and ask yourself a question, why not to trade? And the answer is clear. When it's stuck in the range, it doesn't develop nothing. Well, unless you go, of course, like pounds and euros, sell top of the range, then you get yourself the probabilities. But if you start to play inside, switch directions based on the look-like momentum, it will not work out well. Next one, pound franc. As long as the invalidation zone holds, the pair is expected to continue inside this mini range before we go lower to 128, 127, and then the rally. So from my point of view, bullish as long as this invalidation holds. Break below that, game over. But, well, breaking close below that, and game is over. Currently, what the pound franc does is a triple double. Triple is in, double is not yet in play. So if we get the double cycle, it's an amazing buy opportunity. The other scenario to follow is triple and range, right? Because range is also possibility for corrective cycle, right? This is also one to pay attention to. Invalidate below the last low and game is over for the buys. We are aiming towards 128, 127. Meanwhile, it was and remains bullish plan. And the euro franc, which is fighting the resistance, we do want to see the break of the trend line and lower lows creating, right? So patience. After we got that, sell the rallies. Indices, very important update, because the German DAX finally making the second leg, reaching the 61.8 area, right? Now we do want to see divergence completing, and whoa, that's ugly line. That's better. And then the trend line to be broken. Happened. We are back to sell rallies. 1, 2 are the places we are starting to pay attention to. 61.8 and 100 of the corrective cycle. Okay, and the American indices, there is nothing happening with them after the invalidation reached. Nasdaq invalidated this top from previous week, so there is currently nothing to be traded. For longs, I was asked, so are we good for longs? I never, technically yes, it's good for longs. I never go longs when all the higher time frames divergences are against me. I prefer to sit away and say, okay, I'm missing, but to wait for the opportunity, the next opportunity for the sales to come, rather than go and find myself suddenly in the middle of a possible crash. So for me, once I face higher time frames divergences against me, I never go with this trade. One interesting news, well, not really new, we've been talking about that, to pay attention to is the Deutsche Bank. We've been talking about that. It's finally here and happening. This was the monster cycle we have been talking about. It's here. The divergence is in play. Daily also making its cycle by itself. Special, triple, you name it. Falls break in play, higher highs in play. We are for buys, after buys, the Deutsche Bank. This would be the invalidation. So Deutsche Bank joins our list as a stock to look for buys. That's all from my side. Anything from your side, guys, you would like to cover? Anything I didn't cover that you have any ideas, questions, hesitations, doubts? It was a big pleasure, Willem, as always. Thank you for the comment. Anything on your list? Crypto, well, how could I forget? Cryptos are bullish, and remain as long as we hold the invalidation. There is one I start to consider for invest. I'm talking about the Ripple, of course. I want to see the break of the high for a convergence idea, and then look for the invest buys. The rest, same with the Dash. Break above the last high would validate the bulls. Same with Bitcoin, still fighting, still holding, still nothing, but remain bullish from my point of view. So all of the list that we had still remains the same. Nothing new came in play from my point of view. All right, guys, so thank you very much for being here, and I wish you a wonderful trading week. Remember, don't let the market's sudden moves or random moves or sometimes I see in the chat like, oh, it's moving, and then you're looking at the chart and then boom, it's 15-20 pips. Don't let these little confusions, noises to confuse you, seduce you, and make you wrong decisions. Before you make a decision, ask yourself the questions. Not why yes. Why yes, it's too easy to find. There is always a resistance, always a trend line, always a support, always Fibonacci, always candle, always whatever. It's much easier to find why not. And when you start to see the reasons why not, better wait for clearer setup. At the end of the day, remember, trading is all game of probabilities. All game of probabilities and statistics. When you start your trade with better odds, which means higher time frames with you, support you, and you don't have signs against you from them, your chances there are higher. It's not a guarantee or warranty for any profit. It is a warranty for better starting point. And again, of probabilities, this is exactly how you improve your performance. Thank you very much for being here, guys. I wish you a wonderful day, and I'll see you in the Telegram groups and tomorrow. Bye for now.